Greetings from Yuga Accounting and Tax Consultancy. We are happy to meet you through our YouTube channel, Awareness Session for VAT. UAE already completed 2 quarterly return filing VAT. There are few risk areas we identified. We would like to share with you. During VAT return preparation and review process, a number of common issues were identified across many business. These issues are summarized below to enable business to assess whether the issue impact them, and if so, to rectify them. The next quarterly return is due. Number one mistake: recovery of input VAT using invoices which do not meet the tax invoice rules set out in the executive regulations. FTA already started auditing compliance by requesting sample invoices from business following the submission of first VAT returns. Business should review their accounts payable properly and process the invoices and ensure the tax invoice rules are applied correctly and consistently. Number two mistake we identified is inadequate number of tax codes within the accounting system to allow and identify accurate VAT reporting. Many VAT accounting systems were set up with around 5 to 6 codes, which for most businesses are not sufficient. A particular issue was use of one non-VAT code to record all out of scope or exempt and zero rated transactions. For purchases, many businesses are using one tax code for both imports of goods and services, which makes the box 6 reconciliation extremely difficult. So business need to ensure that tax codes allow them inadequately track and report all type of sales and purchase separately and services separately. And number three, there were number of instances where VAT from other countries was incorrectly recovered through UAE VAT return. For example, Saudi Arabian VAT being recovered through UAE VAT return. There appears to be a misconception that as the UAE and Saudi Arabia are both within the Gulf Cooperation Council, this is permitted like this. Our team also noted instances some clients claimed European Union VAT through UAE VAT return. VAT is only recoverable through UAE VAT return in the country in UAE in which the VAT is incurred. It is not allowed to claim Saudi Arabia VAT or European Union VAT in UAE VAT return. And number four, some people misunderstanding in relation to the requirement to apply reverse charge on imported services. There were many businesses subject every foreign purchase to this reverse charge, while others were not using reverse charge at all. The issue highlights the gaps in transaction mapping and practical application of the VAT rules at the accounts payable processing point. Business which have not done so already should map their transactions including foreign purchase and assess the UAE VAT reporting obligation of each transaction. The quality of data generated by many business was incomplete, with details such as tax registration number of vendors and customers are missing. Many business performed number of manual transactions, manual adjustments outside the system to comply with the VAT to save some time. It's required a lot of complicated reconciliations before VAT return could be prepared. A review of the IT process, including the adequacy of tax codes and accounts payable and accounts receivable processing, should be undertaken before these errors build up into significant financial and operational risk. If suppose if you are missing to properly link the accounting code and tax codes during the early period of VAT filing, then after 2 3 years it will be like it's difficult for you to come back and work on these issues. So it's better early as possible you fix this kind of mistakes. There are number of entities did not realize that they could recover VAT incurred on capital assets and incorrectly blacked the recovery of such input VAT. Input VAT incurred on capital assets can generally be recovered subject to the normal rules and subject to adjustment for change in use. And also some companies they didn't realize they have to pay tax on the sale of capital assets. So when you are eligible to claim input tax on capital assets, at the same time when you are selling the capital asset also you have to apply VAT on capital asset. Thank you for watching our YouTube channel. Keep watching for more videos on awareness session. Thank you.